Hello, everyone, and welcome to Teach, the channel where we talk about all things teaching. My name is Zander. I am an online ESL teacher and entrepreneur, and I am also the regional director for ETF Online for the African continent. We are passionate about training teachers, whether you are an existing teacher or you're considering making a career change. We can help you do both. It's what we're passionate about. It's our vision, it's our mission. And so if you're interested in either making a career change into the world of online teaching, or if you are already an online teacher and you want to take your career to the next level, feel free to contact us. You'll find my email address in the description of this video. It's zander@etefonline.com. Now, we are currently busy with a series of interviews that we're conducting with key role players in the industry of online ESL teaching. And so over the past few weeks, we have been conducting very interesting interviews with online teachers, all of whom who started their careers within the past 12, 18, or 24 months. And we've shared with you both the good and the bad and the ugly. So we want you to see all sides of the online teaching industry. If you haven't watched the previous interviews yet, feel free after today's session to go to our YouTube channel, click on live, and you'd be able to see all of the interviews that we have conducted over the past few weeks. And so we'll continue to conduct those interviews. We've got some very exciting interviews coming up, especially one with the founder and CEO of an online English school based in Japan. He's going to be talking to us about where it all started, what they're looking for in an online teacher, what they're looking for when you submit your CV or your resume, when you apply for a job. He's going to give us a bit of the insights into that. So feel free to also join us for the next few interviews. Every single Monday afternoon, South African time, we're conducting these interviews. And so if you haven't subscribed yet to our channel, I would really appreciate it if you just hit the subscribe button. If you like what we're doing, hit the like button. It really helps this channel to grow and to reach more people with the valuable information that we're sharing here. Now, today's episode is a special one. It's one that I've been looking forward to for quite a few weeks now. It's probably among the top 3 questions that I get asked all the time from online teachers and also those teachers making a career change or considering online ESL teaching as a career, is the issue of tax, right? Should we pay tax as online teachers? When is my money taxed as an online teacher? How much tax should I pay? Should I register a company? All of these questions we are hoping to answer in today's session. Please take note, this is specifically aimed at the South African audience, for those people teaching from South Africa. Based on our tax system, we will tackle this topic. And also, seeing as it's tax season, I believe that this is a very appropriate time for us to delve into this topic. So we'll also be having a Q&A session at the end where you can ask all of your questions. Just take into consideration that the expert that we'll be having on today's session is not a registered financial advisor. However, he is a professional accountant and he's also a registered tax practitioner in South Africa. So the advice and insights he'll be sharing with us today will be very valuable to you as a online teacher from South Africa. And it also turns out that he is my brother-in-law, right? So I'm not married to his sister, but he is married to my sister. So we have a very good relationship. We've known each other for many years, and he's also been personally helping me with my tax structures as an online teacher over the past few years. So with that said, I would like to bring our guest onto screen. I want to introduce to you Ruan Dique, who, as I mentioned earlier, is a professional accountant and a registered tax practitioner, and then sort of as a subtitle, also my brother-in-law. Welcome, Ruan. How are you today?
Hi, Zander. Thank you for the quick intro. I'm very good. Looking forward to the session. I think there's not a lot of people out there that can say that tax actually excites them. So for me, it's a very exciting subject. So yeah, I'm excited to be here.
I can definitely attest to that. I remember many specific instances around the braai when Ruan and I would talk about tax. So I could definitely testify that he is passionate about tax. He's passionate about his job, and he's really good at his job. So without further ado, Ruan, let's, before we dive into some of our discussions and some of the issues we're going to tackle today, why don't you just give us a brief background about who you are, give us your professional background, what you're doing at the moment, and all the rest.
Okay, great. So yes, hi to everyone. Thank you for the opportunity. So my name is Ruan, as Zander just introduced me, and yeah, I've completed my studies at NWU at the Potchefstroom campus in SA. After which I've conducted or concluded my articles. That's a period in your professional time of becoming an accountant or tax practitioner, whatever route you choose, that you probably hate the most. But when you're done with it, you probably look back to it and you're actually grateful for that period that you went through, because that actually grafted you. So yeah, did articles, and then I've stayed on into practice for a couple of years, after which I left to join the corporate world a bit, where you get exposed to a bit more different scenarios and structures and things like that. And yeah, I've been there for a few years, 4, 5, 6 years, more or less. And then about a year ago, we actually established our own practice. So currently we're practicing for ourselves under Grocon Consult. So we are full on accounting and tax advisory firm, doing various financial services actually. Yeah.
Excellent. What a good background to have for our guest today. Thank you very much for that, Ruan. And I see we also have some people saying hi in the chat. Kobus Botha, good to see you on here. And Pepe, great to have you as well. I know they are both online teachers currently, and definitely looking forward. If you're watching, I see we have a few people online. Feel free to also say hi in the chat and introduce yourself. As I mentioned earlier, we'll have some Q&A at the end. So as we go through our discussion today, feel free to post your questions in the chat, and we'll definitely make some time at the end to address them. But let's get into the topic of today, which obviously is tax. So I guess the first question, Ruan, is do online teachers in South Africa need to pay tax, or are we free of that?
I think nobody is free of tax.
Yes.
Yeah. So I think, yeah, I don't think you definitely need to pay tax, and it's quite, in the beginning you can think that maybe there's ways in cutting my tax and not paying tax and getting away with it, but at the end of the day, you're just shooting yourself in the foot in so many different fronts. It's not even funny. So yes, you definitely need to pay tax. But I think the biggest thing here is that we've discussed also a few times is probably the mindset change, because for online teacher, you now need to pay your tax yourself, versus there's no employer deducting your tax and paying it on your behalf.
Exactly, and that's such an important point. I remember the first time that I had to pay my own tax. The pain inside of my heart at that moment was excruciating. So we do understand what people go through, and I'm not sure who this quote belongs to, but someone said that there are only two guarantees in life: death and tax. So that's something we have to deal with. So Ruan, how does SARS, the South African Revenue Service, how does the institution view us as independent online teachers?
So it's very simple. You guys basically qualify what they call self-employed. So you're a self-employed individual, and therefore automatically you are seen as a provisional taxpayer in South Africa. But the big but comes in that the obligation is with you as the taxpayer to actually register as a provisional taxpayer. And that is quite important, because although you qualify in being provisional taxpayer, they are not going to register you as a provisional taxpayer. And the thing here is the fines, the penalties and fines that are levied on provisional taxpayers are very heavy. It's insane. It can go up to 200% of your tax bill if you're not compliant in provisional tax. So that's something that you really should look at. As soon as you qualify for as a provisional taxpayer, please consult your accountant or advisor or tax practitioner so that they register you as a professional taxpayer, so that you can be compliant with that.
That's a very good point. I was actually, this is embarrassing, but after 3 years, I was not aware of that. So what you're saying is obviously SARS will not know if you've quit your job and now you're self-employed. You've actually got to take that action and register yourself as you said, a provisional taxpayer. That makes a lot of sense.
Yes, because the thing is that what's going to happen if you're not registered, if you don't take the obligation in registering, and at the end of the year you submit your income tax return and you didn't submit any provisional tax returns, and there's a tax amount due, and SARS picks up that you are a self-employed individual from your income tax return submitted, they will assume that you submitted a null or zero provisional tax return. And based off that, you're going to get some hefty fines, as you need to be 90% or 80% on the second provisional tax return accurate to the amount of tax due to SARS. So yeah, it's quite important.
So that's actually interesting. You're saying when you submit your tax return as a provisional taxpayer, you have to, the amount that you calculated and the amount of tax you paid should be within a 10% deficit of what the actual amount is. Is that right?
That's right. So with your first submission of the 6 months, you get a 20% grace amount or period or gray area. And then with your final second provisional tax submission, that's usually end of Feb, you only get a 10% gray area to get closer to the 100% mark. SARS wants all your taxes.
They want the 100%.
Yeah.
Right. So on that note, so you're saying that SARS views us as provisional taxpayers. Are there different routes for us to structure ourselves as self-employed people, or is there only one route that all of us need to follow?
Yes, I think that's the nice thing about tax and business as another subject, but there's always choices and routes to explore. But I think what I always say to our clients is keep it as simple as possible. Simplicity is sometimes your best way going forward. But basically, you have two options, and the first option is trading as a sole proprietor, meaning that you're self-employed and you're trading under your personal name. You're getting income, and there's some expenditure that we'll touch on now that you're able to set off against that income, and then you are being taxed on the income tax rates for an individual according to your taxable income. So that's the first kind of option that you have to trade in. The second option is basically to trade in a registered company. So then you'll have to register a private company, and all your income will flow through your company. And there's also some expenditure that you will be able to put through your company at the end of the day. You'll be taxed in your company, and maybe we can have a chat a bit more about these two options and what it entails.
Yeah. So in your professional opinion, working with clients, would you say that normally most people building a business or being self-employed generally starts out as a provisional taxpayer? I think you used the term sole proprietorship, and then eventually transitions to a business. And then also, how would people know to make that decision? When should I be a sole proprietor, and when should I decide to register a company instead?
Yes, so I think definitely the starting blocks would be to trade as a sole proprietor, to trade in your personal name, so that you can first just see what is actually happening with your income, with your expenses, what is actually my taxable income. And I think as a rule of thumb, it's very difficult to say just this is when you hit this spot, you need to move over to a company. But I think definitely as a rule of thumb, when you earn anything below 80,000 Rand a month, I would say definitely stick to the sole proprietor. You'll be better off. When you start getting over the 80,000 Rand mark per month on the income side of things, then the corporate tax will definitely be a saving for you in moving over to a company structure. Because there's also other considerations what you need to take into account. Moving to a company, there's a Companies Act that you need to comply with. There's more compliance that's going on that you need to keep your business afloat and going versus trading as a sole proprietor. And the biggest difference for me is trading as a sole proprietor means that it's your money. You are the sole proprietor. It's you as the individual earning that income. Versus the company, if you trade in a company, it's no longer instantly your money. It's the company's money. You are a
Yeah.
shareholder of the company. But that means there's a period where your money is going to be stuck in the company, and there needs to be looked at further ways in getting that money actually to your pocket.
Yeah. So you're saying 80,000 Rand a month is the almost the tipping point at which you need to at least think about registering a company and trading in that way.
Yes, definitely.
Great. Well, that leaves plenty of room, I'm sure, for most teachers watching. We're not yet at that point. I would be interested to hear if anyone watching right now, give us an indication in the chat. Are you a sole proprietor at this moment? And I'm curious to see if anyone's actually registered a company. So for the audience watching, please let us know in the chat if you're trading as a sole proprietor or as a company. So I think we've touched briefly on the pros and cons of each of those routes. I guess the next question for me is, because for us as online teachers, our money has quite a flow from the companies or the clients we work with until it reaches our bank accounts, where if we're looking at working for schools or freelance platforms, they tend to have their own wallet. So if you completed a lesson, the money is paid into your wallet, and then from there there's still like a middleman, which is the payment platform such as PayPal or Wise, which you send the money into that payment platform, and then from there you transfer it basically into the country, into your bank account. At what point in that process is our money taxed? And then another question on top of that: do you think it's a good idea for us to maybe hold some of our money either on the platform or on the payment platform to maybe just control how much tax we pay at any given moment? Or do you think SARS will know about money that's not necessarily in our bank accounts?
Okay, so that's actually a good set of questions. I think let's jump to the first side of it, and that's basically determining when your income is taxable. And the simple answer is it's SARS works on an accrual basis. So as soon as you accrue that income, it becomes taxable. So meaning the moment that the income is due to you, it's already taxable in your hands. Now, it's not necessarily that. So it's either the first on accrual or the first of payment received. So it's not necessarily only when the money is paid into your bank account, then from that moment on, it's taxable. So as soon as the amount is due to you, it's taxable in your hands. You just need to, and that's exactly why companies appoint debtors ladies. So they just get on the phones and phone the clients and say, listen, you need to pay. When are you paying? because it's becoming a cash flow issue. They need to pay taxes on amounts they haven't received yet, and that's the cycle that it just filters through. So that's just an indication of how the tax side of things works. And to get to the second part of your question, it's very interesting. Your industry it's a very interesting subject at this stage or this point in time, as the platforms that you guys are using, mostly Payfast and all those different type of platforms, are not as regulated as it should be currently. So SARS don't have the mandate or the power currently to regulate those platforms. So they don't know what is happening inside of those accounts. What I can tell you is they are investing a lot of money and infrastructure in IT in getting those platforms to comply with their legislation, so that those platforms in the future, we are heading that to a stage where those platforms will be obligated to submit certificates of income to South African Revenue Services directly. So that's just going to eliminate you in the process. It's straight going to SARS, so that there's absolute no interference. So in the future, we're definitely heading towards in that direction. Currently, it's not in place. So yeah, it's kind of difficult. It's a difficult question to answer. It is taxable. The other thing is, if you're sitting with 20,000 rand in your Payfast account, what is it actually doing for you? It has to have a purpose. If it's not, you can rather extract it and put it in a money saver and earn some interest on it. If you're looking to save on that money for your provisional payment that's coming up. So just keeping it in your platform, in your hidden bank account, if I can call it that. It's not really what it is, but on your platform won't necessarily save you on tax.
Exactly right. Yeah, I think the one thing that I've sort of been toying around with in my mind is, because the money that I have in my PayPal account or on the platform is either in US dollar or euro, in a sense, having foreign currency to me it's like, it's not bad, because I mean the rand is going down in value. So in a sense, you can probably argue that it's running in it, or it's getting interest on that. But as you said, at some point, for me to use that money, it's going to get taxed at some point. And what you're saying right now is SARS won't necessarily be able to see how much money you have on the platform right now, at least, but they're working towards eventually being able to see what's happening even in those accounts.
Yes, definitely.
Yeah, I see here Pepe wrote a comment here: true, no saving value in a PayPal account, but useful to pay stuff overseas in US dollar. It's a good point, Pepe. Obviously, if you're traveling overseas, or if you're paying for something on an online platform overseas, that could potentially be also another useful function of keeping money in there. So very good point. So Ruan, let's maybe go a bit into, for people who've not been through one entire cycle of actually submitting your tax returns twice per year and all of that. Talk us through a 12-month cycle of an independent online teacher. What does that look like?
So basically, as you're being registered as a provisional taxpayer, you need to submit provisional tax returns. So those returns will be due. The first one is in August each year. That's your first provisional tax submission. So let's just take it a step back. So each tax year starts with March and ends in February. So the first 6 months mark is in August. So that's when your first provisional tax return needs to be submitted in the month of August. So what happens is you'll submit an estimated taxable income amount to SARS to say, listen, this is more or less what my income was for the first 6 months. This is more or less my expenditure for the first 6 months. This is more or less where I see it going for the full tax year. So for a 12-month period based on the current 6 months actuals. And based off that, you need to make a provisional tax payment to SARS. So then you're going to have your first provisional tax payment. Then moving closer to the end of the tax year in Feb, before that last day of Feb, you need to submit your second provisional tax return. So then you'll need to consult with your tax practitioner or accountant again, and then you are going to calculate more accurately a 12-month period income expenditure to get a taxable income in order to submit that second provisional tax return, so that you can pay your second provisional tax payment. So it basically comes down to you paying your annual tax in 2 payments, in August and in Feb. And then what happens is, as soon as tax season opens, normally in July, the month of July, that return will be opened and you'll have a chance to actually submit your actual figures for that specific tax year. And based off your first 2 provisional tax payments, you will either be perfect, 100% fine with SARS, or there might be a small amount that you still need to pay in underpayment, or there will be a refund due to you due to overpayment of your provisional tax.
Okay, so basically at that point, you said June, July is where everything is consolidated to figure out if you were below or over in your 2 payments for the previous financial year.
Correct, 100%.
You mentioned at some point, like twice per year, you're obviously sort of calculating your income, and then you also mentioned deducting expenses. So what are some of the things that we as online teachers can legally deduct from our taxable income to make it as low as possible?
It's I get this question actually a lot in different industries, and the simple answer is as long as it makes logically sense. That's the first part of the answer. We've got a client the one day, and he tried to claim motor vehicle expenses in his company, but his company doesn't own a motor vehicle. So it's that kind of logic that I'm talking about. You can't just think about what you're trying to claim. If it doesn't make sense, you probably can't do it. But the more accurate answer is definitely as long as the expense is to derive income, you are allowed to deduct the expenses. So looking at your specific industry, there's a lot of examples that we can quickly have a look at, but things like your accounting fees, if you're going to pay an accountant to do your tax returns, cell phone expenditure, your internet costs, your home office expenses, if you're claiming home office expenditure, insurance on your laptop, there could be cleaning services that you're using, printing and stationery, subscription fees that you're currently using for softwares, different types of software, all your bank charges, all your pay fast bank charges, your platforms, different platforms charges, and those kind of things. So yeah, there's quite a lot. Any expense that relates to the deriving of income is allowed to be deducted.
Excellent. Well, that's a very long list, and that's something that I normally tell people. Something that's excellent about being an online teacher is there are so many things that you can actually deduct that could bring down your taxable income at the end of the day, which obviously as teachers or as sole proprietors or even business owners, that's what we like to hear. Now, in terms of the process of submitting your tax returns twice a year, first time in August and then again in February, and then reconciling it in June and July, is this something that an individual can do themselves, or does someone need a tax professional to actually do this on their behalf?
Look, I think if the online teaching is your only source of income and you are comfortable in compiling a basic income statement with a balance sheet, then you probably will be able to submit your own tax return. You'll be able to complete the tax form online on e-filing, and you'll be able to submit the returns. I think um, where there's different sources of income coming into the equation, as well as maybe lump sum amounts, and then it could be could quickly get a bit more technical, where I would say then rather maybe just book a consultation, even at least with your tax practitioner, just to make sure that you're getting it right. Because the biggest problem is if you miss the provisional tax payment threshold that SARS allows you to be out with, um, there's hefty fines involved. As I said, that it can go up to 200% of your taxable or of your tax amount payable. So they're quite very strict with provisional taxpayers, because they are not getting their money on a monthly basis as per normal taxpayers in South Africa. They're only getting their money with two payments every 6 months. So they want to be making sure that those payments coming in is as accurate as possible. So yeah, I would definitely say at least consult with your tax practitioner, especially if it gets a bit more technical, because there is certain expenses that is specifically excluded in the Income Tax Act that you are not allowed to deduct, that you will not necessarily know about. Or there is, for example, some asset additions that you acquire as an teacher, like a new laptop, and there's accounting expense that you can put through on that, like depreciation, and that will also bring out your or down your taxable income. So there is value in referring it to somebody to get it professionally done. Yes.
So what you're saying is that if your things are quite simply structured, if this is your only income, maybe it's even worth it to get a tax practitioner to at least guide you through one cycle and basically train you how to do it yourself. But if things are a bit more complicated, like I know in my case, it's not just online teaching. It's within the online teaching space, but it's different sources of income. It might be better to get someone to help you. And as you said, it's mainly in terms of communication and cooperation between a tax practitioner and his client. It's basically 3 times a year that you have to be in communication, actually submit things. But for the rest of it, it's basically the teacher themselves that just need to make sure that they keep up with jotting down or keeping record of income and expenses. Which brings me essentially to the next question. What advice would you give someone like me to do throughout the year? For example, between March and August and between September and February, what are some things we can some habits we can form to make the actual submission at those times a lot simpler for you as a tax practitioner?
I think the best would be is to really sharpen your administration side. I think this is the side that that we don't like to do at all. But I think, or I know what definitely makes it so much easier. And if you see the value in it as well, it won't be an admin burden. Is just keeping a summary of your income and expenditure updated on a monthly basis as you go along through the year. So when we get to the first submission of your provisional tax in August, you can already provide me with a summary of your total income for the first 6 months, as well as your expenditure for that 6 months. So I always say, if you doubt about an expense, if you can claim it, put it on your summary, and we will advise you if we are able to deduct it or if we are not able to deduct that at all. And I think even to make the audit verification, if your return gets selected for audit verification at the end, to make the process as seamless as possible as you go along.
Yeah.
Keep a folder of all your slips or proof or supporting documents. It's normally a invoice or a slip that totals up to the amount that you've put on your summary. So if you have 2,000 Rand internet expense, make sure you have some proof of that internet expense of 2,000 Rand. If you have that organized, life's going to be a breeze in terms of tax.
And that actually reminded me of something else, the idea of audits. How often do sole proprietors get audited? Is it a given? Should we accept the fact that we'll most likely be audited, or what is that like in your experience?
Yes, I think it will probably 80% of the time to a 90% time of the time you'll always get audited. And it's just the system automatically flagging you as a result of it. And it's quite simple. SARS is developing its system so that all data from any third party gets directly linked to SARS. And now you, as a provisional taxpayer, is saying to SARS, listen, here's something that you don't know about. And they definitely want to have a look at it. But most of the time, it's just the system selecting it automatically, and it's just complying through the process. It's nothing really to stress about.
Yeah, great. And you, as a tax practitioner, obviously facilitates that audit between your client and SARS.
Yes, yes. So, and that's why I say if you, as the client, are organized admin-wise with your supporting documents, the process is so seamless, and it usually takes less than the prescribed days to complete the audit. And what we've gathered is the longer you take to upload your supporting documents to SARS, the longer it gets to be allocated to a SARS official to eventually close off that case.
Yeah, great. That's very good. Well, Ruan, I know we had another thing planned to maybe show a quick case study, but I don't want to go on for too long. I want to take some time to answer some of the questions that we've received. So the first one that I want to throw your way is from, I see in the chat, Trinity Teacher. And just before we address this one, if anyone watching, if you have a question, feel free to post it in the chat now. Ruan is going to address a few of them. So Trinity Teacher asks, what is the minimum earning threshold? Is there one?
Yes, there is definitely one. Don't hold me against the cents, but it's around 90,000 Rand per annum. If you earn more than 90,000 per annum, you'll definitely be taxed. So earning less than that, no tax implication.
Okay, so that's what, round about 7-ish thousand per month. If you earn less than that, then you're saying you don't have to submit a tax return if your income is lower than 90,000 per year.
You'll still have to submit the tax return because you're
Okay.
yes, self-employed, but there won't be a tax implication.
Okay, gotcha. Great. Very good question. Thanks for that, Trinity Teacher. I also have a question here from Pepe, who said, my main question is the BOP code that FNB asks for. I'm using educational services. Is that right? So this is a great question. I've also wondered about this. So obviously, just to explain to those who may not know what we're talking about. So when you withdraw your funds from PayPal or Wise or any of these payment platforms, FNB or whichever bank you're banking with will ask you what is the source or the reason for these funds, and they give you a list of codes saying, is it a gift, or is it earnings, or is it commissions, or whatever. And basically, you've got to select the one that's most appropriate. And Ruan Pepe is asking, is the one for educational services correct to use as an online teacher?
Yes, she is spot on, 100%.
Excellent. So there you have it. Another question that I had earlier today, I believe it was from Carol Ann. She asked the following: I would like to ask about claiming costs related to rental of office space within my home. My accountant has advised against claiming these costs as he says it will have implications if or when I sell my property.
Okay, that's actually a good question, and it all depends on the total space that you're claiming for. So, how a home office expense claim works is that all the expenses that you're claiming in terms of your home office are proportionate to the total amount of squares of your home office in comparison to the total amount of squares of your home. Okay, so let's say your home office is only 10% in square meters of your total home. That's the amount of expenditure that you'll be able to claim for your home office expenditure. Now, what happens when you own the house and you sell that house and you make a profit on that house? There's a capital gains implication. But here's the thing. There's an exclusion on a primary residence for 2 million rand per annum. So what this now means is when you get to that exclusion of 2 million, it will also now be proportionate with the same percentage that you've claimed against your home office expenditure. So if it was 10% that you've claimed for home office expenditure, square footage, then you'll only be able to get 90% of that exclusion on your primary residence capital gains that you'll be able to claim back. But again, in order for you to sell your house with a profit of 2 million, you probably gotta hit a good sale. So I think it's definitely worth it to claim the home office expenditure. Just keep in mind that is the implication at the end when you sell your house. But it's just a lot of admin. But once it's through, it's set up, you shouldn't have an issue.
And you're saying the 2 million rand exclusion is 2 million rand of capital gains. That's not the full price of selling price of your house. That's the difference between the buying and the selling price has to be above 2 million for you to not qualify for the exclusion.
Correct. So that's 100% correct. So you're buying the house for 10 million, you're selling it for 12 million, meaning there's a capital gain of 2 million, a profit basically that you got on that sale. Now SARS is saying that first 2 million, because it's your primary residence, you don't have to pay tax on that first 2 million. Anything above that 2 million, you got to pay tax on.
Yeah.
So now if you only if you claim 10% home office expenditure, now you won't be able to get the full 2 million exclusion. You'll only able to get 90% of the 2 million rand in so it's what 1.8 million you'll be able to get it as an exclusion. Yeah.
Gotcha. Yeah. Well, I look forward to the days where online teachers can buy 10 million rand houses and make 2 million profit on that. So, Carol, and then to ask your question or to answer your question, please go ahead and deduct that office rental expenditure from your tax submission. It's definitely worth it. Now, another question here we have from Angus that I'm putting on screen right now. Angus asked, what is the tax implication if my current tax practitioner advised me to submit a zero tax return during my first year of teaching online? I'm not sure if that's too vague a question or if you understand what he means.
Yes, it just depends on this when exactly the submission was made in terms of the previous provisional tax payment. So if the deadline was already passed, it would definitely be better to submit a zero tax return and to declare that income with your next income tax return, so that you don't get those hefty fines that I talked about, so that you rather, it will be much cheaper to just declare it with your next income tax return in, so that you can actually budget for your provisional tax payment, rather than declaring it. If you miss the provisional tax payment, you're going to get some hefty fines. But yeah, that's one way to look at it, not necessarily the right way to do it. Yeah. But also the other implication in submitting tax returns, you guys need to remember, is now that you're self-employed, especially when you're looking at credit applications or anything like that, where you need to prove your income, all the institutions or banks or whatever is going to ask for ITA 34 assessment, and that's basically SARS assessment after you submitted your tax return. So, and that they are only trusting that document, because what you're telling SARS is obviously the right
Yeah, very good. I think I had probably a similar situation to Angus, where I think I only recently did my first year of online teaching submission as well. So it was something similar for sure. I don't see any more questions in the chat. If anyone has a quick question, go ahead and pop it in the chat. Otherwise, we're going to be wrapping up. I'm going to quickly give Ruan a quick opportunity to just tell you more about his services. I asked him this afternoon if he still has more capacity to take on any more clients. I personally am one of his clients, and he said he's definitely available. If any of you wants to make use of his services, he also mentioned that he'll give like a ballpark figure of what that is. But as far as I have it, and you can correct me if I'm wrong, Ron, but you basically pay twice per year for every submission. But just tell us a bit more about what that would be, what you could potentially offer clients, and then maybe a ballpark of what they could expect to pay for your services.
Yes, so definitely we would definitely be able to assist if there's any need or advice. And it's a submission of 2 provisional tax returns, and then the third submission is your actual income tax return submission. And that's probably where guys gets confused most of the time, especially in the beginning, is to realize that there's 2 provisional tax return submissions, and then there's a third consolidated income tax return submission. And yeah, so that's basically the process. And then you submit all your supporting documents to us, and we submit your return. And that could be anything. It just depends on your other income or other sources of income and the complexity of it. But usually it can be anything between 650 to 1,200 Rand per year.
Yeah, depending on how complex the submissions are.
Yes.
Gotcha. Great. I had something. Oh, Angus again posted just a follow up. So Angus was the one talking about his current tax practitioner recommended he submit a 0 tax return. He said the following: it was after the deadline, and I'm not yet registered as a tax or as a provisional taxpayer.
Makes sense. That makes 100% sense. Definitely the cheapest way to do it.
Great. Excellent. Ruan, if people want to find you, make use of your services, where can they contact you?
So they can just send us an email at support@growcon.co.za. And Growcon is GROCON.
Growcon.co.za. I'm putting it in the chat for everyone. Support@growcon.co.za, and Ruan will be able to help you get set up. Even if you just want him to do the initial setup and give you a bit of training, I've worked with him personally. I am, and I've never said this ever in my life, but I'm extremely satisfied with how much tax I'm paying at the moment, and that's all thanks to Ruan's expertise in this. So if there are then no other questions anymore, we're going to wrap it up here. I want to thank everyone so much for joining. I see that we had quite a few people joining, and thanks for everyone that asked questions. Please feel free, once again, a reminder, subscribe to the YouTube channel. like the videos, leave a comment. I'd be happy to respond to as many of them as possible. And then keep your eyes peeled on Monday afternoons for more interviews that will be coming over the next few weeks. But with that said, Ruan, thank you very much for giving the time to be here. I'm sure it was very insightful for everyone listening, and even those people watching the recording at the moment. I'm sure you got a lot of value out of this. I see here Pepe says, thank you so much, Zander and Ruan. Thank you very much, Pepe. We hope it was helpful. But with that said, thanks, Ruan. Thanks, everyone watching. Have a good evening, and we'll talk